This is an introduction to decision making using Excel. In this workshop, we are going to talk about the what if analysis, and we'll have three parts. In the first part of the goal seek, we will see how to name cells to make models more meaningful, use a couple of financial functions, and use the goal seek as part of the what if analysis. In the second part, we are going to talk about the sensitivity analysis using one-way and two-way data tables. And the third part, we are going to use something unconventional, scroll bars for sensitivity analysis. We'll find out how to activate the developer ribbon and how to use the scroll bar for sensitivity analysis going beyond 2 and 3 dimensions. This is the first part of the what if analysis using Excel. We are going to deal with the goal seek. First, we're going to cover naming cells to make my models more meaningful. We'll use a couple of financial functions, and then we'll cover the goal seek. We are using the file called goal seek. On the sheet named goal seek, we have a model. We are buying a Jeep for $20,000. The down payment is $2,000. We are going to calculate the loan, the monthly payment, the total payments, and the total interest. So usually when you calculate formulas in Excel and you say equal B2 minus B3, it really doesn't make sense. So anytime you use decision-making models in Excel, it's a good idea to use names. The way I'm going to do it, I'm going to cover or select the two columns, and I'm going to go to formulas, create from selection, ignore the top row because we want to name the cells in column B only by the names you see in column A. When you say OK, you're going to discover that this is named item in the name box. This is price, down payment, loan, and when you calculate the loan and you say equal the price minus the down payment, it's going to make it much more meaningful if anybody looks at your model or even you come back to visit it a while later. Now we are going to calculate one financial function. If you'll understand how this is done, you'll understand how any financial function can be handled. So you can go to function, financial, touch any of the names here, hit P for a couple of times until you see the payment function, and the payment function explains that it calculates the payment for a loan based on constant payment and a constant interest rate. When you say OK, you're going to see the menu. Note that the menu has cells that have bold letters. These are mandatory. And then you have the optional ones that are not in bold letters. So let me start with the rate, and it explains here. Rate is the interest rate per period for the loan. For example, use 6% divided by 4 for quarterly. Because we are dealing with monthly payments, we are going to click on the rate and divide by 12. So in this case, it's not quarterly, it's monthly. NPR is the total number of payments of the loan. I can enter 36, but later on you'll see that for the sensitivity analysis you really have to have the actual formula. So I'm going to click on the years times 12, and the last mandatory cell is the present value, and the present value I'm going to say minus and click on the loan. Why minus? It's part of financial calculations, but just remember every time you deal with a loan, because you're getting a loan, not giving a loan, enter a minus there. What are the last two items that I'm not going to cover? It's the future value. If you have some kind of a loan that you have a final payment on the last month, I think it's called also a balloon loan. You're going to enter the value there. Type by default is 0. You don't do anything. You pay at the end of every period. If you had a loan where you pay at the beginning of the period, you're going to put a 1 there. So you see already that for the next 3 years you're going to be paying $564.05. Let me calculate the last 2 items here that I'm going to be using on the next couple of sessions, and calculate the total payments is going to be equal to the payment times the years times 12. And the interest that the bank is going to make on us is equal to the total payments minus the loan. So this is what we calculated. And to remind you, we used before a shortcut with this tilde that I typed here. It's under the escape. You can use Control tilde and it will show you all the formulas on the sheet. Control tilde is a toggle. So now you see how it makes it more meaningful if you look at it. If you don't have the tilde, you can go to Formulas and say Show Formulas and click on it again. So now what is the goal seek all about? Let's say that we can't pay $564 a month. Let's say that our budget director say that I can use only $530 a month. What am I going to do? I'm going to click on the payment and I'm going to go to Data, What If Analysis, Goal Seek. What did she say? She said $530. So what am I going to do? That's my decision variable. So I'm going to click on the price and say OK. What did we find out? That if we can't pay $530 and we want to buy a less expensive Jeep, we can buy ourselves an $18,913.26 Jeep. But if you like the Jeep, we'll try something else. We'll cancel it and try something else. Maybe we can come up with a higher down payment. We can click on Data, What If Analysis, Goal Seek. We want to pay $530 only, and the changing cell is going to be the down payment. So if we can come up with $3,086.74, we're on business again. If we can't come up with a higher down payment, we can try something else. We can try the number of years, which doesn't make sense, so maybe we'll try the interest rate. So I'm going to click here and say Data, What If Analysis, Goal Seek, 530, and click on the interest rate and say OK. So if we can convince the bank to give us a 3.82% interest rate, we can buy the same Jeep for $20,000 with the same down payment of $2,000 and the same 3 years as part of the loan. So this was our Goal Seek, the first part of our What If analysis. We showed how to use names in Excel to make the model more meaningful. We showed how to use financial functions, which you can apply to almost any financial function, and we covered the Goal Seek. On the next session, we will cover the sensitivity analysis using data tables. This is the second part of the What If analysis. We are going to discuss one-way and two-way data tables. We are using the file data tables sensitivity analysis. Going to the sheet sensitivity analysis, you're going to see the model that we used before, and we used the Goal Seek on it. We calculated the down payment, the loan, the monthly payment, and the total payments, and so on, what you see here. To remind you, we named the cells on the right by the ones you see on the left, and if you want to see the formulas, you can go to Formulas, Show Formulas, and see how we calculated all these things. This time we want to see what would happen to our output, payment, total payments, and total interest, if the interest rate is not 8%? What if it's 3%, 4%, and so on? So I created this table, and I'm going to link this table to the original model. The way I'm going to do it, I'm going to click here and say equal payment equal total payments equal total interest. I typed the text up here, but it has nothing to do with the model itself. Note that I marked the 8% with yellow, expecting it to be the same as the original. This is my benchmark. Now I'm going to select the table excluding the text header, and I say it again, excluding the text header, because if you do include the text header, it's not going to work well. Now before I go ahead, I ask myself what is changing down the column here, and it's the interest rate. So I can go again to Data, What If Analysis, and choose the Data Table. Row input cell, there's nothing changing along the row. I'm going to ignore it. Column input cell, as we said already, the rate is changing here. I'm going to click on the original rate, and I'm going to say OK. And you see how Excel calculated for me the same output for 3, 4, all the way to 9%, and watch that the benchmark for 8% is the same as the original. Now I'm going to do it one more time, but this time for the number of years. And again, I will expect the 3 years to be the same as the original, so I'm going to use the fill and fill up that color. This is going to be my benchmark. So I'm going to do the same thing, link it to the original model. I'm going to say equal payment equal total payments equal total interest. Select the table excluding the text header and ask yourself what is changing down the column here. It's the number of years, so we'll do the same thing. We'll go to Data, What If Analysis, Data Table. Again, nothing is changing along the row, so I'm going to ignore the row input cell and say that the column input cell has the years. Click on the years and say OK, and Excel is going to calculate it for you. Now I have a two-way table. This time I have two inputs changing. Once it's the number of years along the row and the interest rate down the column. So I'm going to click in the intersection here, and I'm going to do the same thing. This time, because I have only one intersection here, I cannot analyze 3 outputs. I'm going to analyze only one. You can try any one of them. I'm going to go with the payment. So I want to know what would happen to my payment if instead of 3 years I have 1, 2, 3, 4, and 5 years. And instead of 8%, I have 5%, 6%, all the way to 10%. And note how I marked my benchmark. I expect this cell for the 3 years and 8% to have the same value as the original. So select the table again, excluding the text headers. And I'm going to do the same thing, Data, What If Analysis, Data Table. Now two things are changing. The number of years is changing along the row. I'm going to click on it. And the interest rate is changing down the column. I'm going to click on it and say OK. So this is the sensitivity analysis that I call using the data table, and this is a two-way data table. If you want, you can change things later. You can say, for example, here equal total payments. It's a little bit too narrow. I can double click for auto fit, and I can use anything else, but I'll just keep the payments here. or you can also change other things, like here say 7 years or 12 years, and here say 10%, and it's going to work. I'm going to undo it. Now we have one problem, that is that the data table can take only two-dimensional inputs. Because of the limitations of the data table having 2 dimensions only, I thought of a different way of introducing 3, 4, or maybe 5 dimensions to the sensitivity analysis table. You're going to see it on the next session. So what did we do in this session? We covered the sensitivity analysis with one-way and two-way data tables. This is the third part of the what-if analysis that we are using. Following the goal-seek, we had the one-way and two-way data table. The two-way data table has its limitations because it allows you only to change 2 variables at the same time. It's a two-dimensional type of table. What we want to do is we want to change more than 2 variables. So what we want to do is we want to activate the developer ribbon to get scroll bars. What we are going to show you is how to use the scroll bars for sensitivity analysis and explain the limitations of the scroll bars, because it was developed by Microsoft to control forms. So on the sheet sensitivity analysis of this file called sensitivity analysis using scroll bars, you'll see the model that we used before. If you recall, we had a Jeep that we are buying for $20,000. We have a down payment of $2,000, and we calculated the payment, total payment, and total interest, and then we used a one-way and two-way data table to do the sensitivity analysis. Now, if you wanted to have more things changing other than the rate and the years, let's say you wanted to have different down payments, $2,000, $2,100, $2,500, different prices, $10,000, $11,000, $12,000, and so on and so forth. So instead of using more tables and crowding up my screen, I'm going to use the scroll bars. Where do I find the scroll bars? I have to add a ribbon called the developer. If you have a Mac, I prepared here 2 little figures. You can go to Excel Preferences. When the preference menu comes up, depending on your Excel version, either go to Ribbon down here and check the developer as the last one, or go to View. You'll find it there. Anybody else who has Windows Excel like I do, you can go to File, Options, Customize Ribbon, and activate the developer. And now we'll have a new ribbon here called the developer. If you have a Mac, the scroll bar is going to be here. If you have the developer like I do, you can go to the Insert button, and you'll see that the first 2 rows have Form Controls icons. Don't use the 3rd and 4th rows because they are used for macros. So I'm going to use this one, the scroll bar. I'm going to click on it gently, because if you click on it and you just move it, it's going to create a gigantic scroll bar. So I'm going to click on it gently and draw a scroll bar next to the 3 here, because I'm going to control the number of years using this scroll bar. So I'm going to right click on it and use Format Control and fill up the information. The current value is 3. That's the number of years. And I'm going to vary it from 0 to 10 with increments of 1. The page change does not work for the Mac, so leave it as is. And for anybody else who is using the scroll bar, just type there 3. It's irrelevant at the moment. And the cell link is the link that we want to have to control our number of years. So I click on the years, which is B6 in our case, and say OK. And now I can use the scroll bar, click out of it. You can use the scroll bar to change the number of years. You notice now we can change the number of years using the scroll bar. Okay, let's try another one. Let's change the price of the Jeep from 10,000 to 30,000 with increments of 1,000. So I'm going to insert another scroll bar. I have to draw them next to the actual values I'm changing because the scroll bar doesn't have a way to identify them, and I'm going to use it this way. I'm going to right click again, format control. The current value of the price is 20,000. I'm going to go from 10,000 to 30,000 with increments of 1,000, and the page change, don't change it if you have a Mac, should be 5,000. I will explain a little bit later. And we are going to control the price of the Jeep. So now if you make a presentation, I'm going to click out of it. You can change the price or the number of years and use it as a third dimension. Now what is the page change? The page change is if you don't have patience to move 1,000. If you recall, it was 5,000, so you can click on the gray area here. It will change by 5,000, and here it would change by 3 because that's what I had as my page change. So where are the limitations of the scroll bar? You will discover very soon that when you start using a scroll bar, that it takes only integers between 0 and 30,000. No negative values, no fractions. So if you want to control, for example, the rate, which is 8%, it's less than a 1, you're not going to be able to deal with it. And if you want to buy any asset that is more than $30,000, you're going to have a problem. So how do we bypass the limitations? I'm going to create a scroll bar just anywhere in the workbook and right click on it, format control, leave all the default values and control this cell. So what happens, it goes from 0 to 100 like that. So what I'm going to do, I'm going to multiply it by 10,000. Let me just format it so it looks better. So you'll see that the value here is actually 10 times 10,000, and then you can go all the way to a million. So you can bypass the limitation and use any multiplier and get any value between 0 and a million. That's one thing. The other thing is, how do I control my rate? So the rate is a fraction, so I'm going to create another scroll bar here. This time I'm not going to draw it next to the rate. I'm going to draw it a little bit above it, and then I'll move it there in a minute. I'm going to right click, format control. I'm not changing anything, I'm leaving the default, and I'm going to control this cell that is next to the rate. Click out of it and you'll see that is 1, 2, 3, 4, 5, 6, 7, 8. Now I can say equal 8 divided by 100, and indirectly I'm controlling 9, 10, 11, and look at my formula. And if I wanted to control it or move it by 1/4%, I divide it by 400, and then I can go and change it. And the last thing I'm going to do is right click, move it over the 15 here, so that only you and me know what's going on, and you can use your scroll bars. You'll see later that I can show you that we can also animate charts using the scroll bar. So what did we cover here? We covered here using scroll bars for sensitivity analysis if we want to go beyond the limitations of the 2 dimensions of a two-way table. You saw how to activate the developer, you saw how to draw the scroll bars, and you also found out how to overcome the limitations of the scroll bar. This is one more example to review the what-if analysis concepts of Excel. We are using the Excel file what-if review example. We are going to discuss the goal seek and the data tables. On the sheet named business plan, we have a simple business plan where we sell 50,000 units for $20 and the revenue is $1 million. We have all these fixed costs, we have variable costs, and as you notice, our total expenses exceed our revenue, and this is why we lose $140,000. What I did to begin with, I named all the cells in column C by the names that you see in column B. What I did, I selected the 2 columns and I went to formulas, create from selection, and I named them all by the left column. And if you're going to go to formulas and say show formulas, you're going to see how everything is named so that the total revenue is equal to units sold times price per unit. So it makes it more meaningful, and also if you double click here, you'll see that this is how we calculated all these values. So the first problem we have is that we are losing $140,000, and the reason is maybe we don't have enough sales. So the question is, how many units do we have to sell in order to break even? To do that, we can go to data, what if analysis, goal seek. To break even, that means we have to have a profit of at least 0. And the changing cell is going to be the number of units sold. And if you say OK, you're going to discover that 59,333 units is the minimum number of units you have to sell in order to break even. If the board of directors is going to ask you how many units do I have to sell in order to have a profit of $1 million, for example, you can go to what if analysis, goal seek, enter the target of 1 million, and go to the changing cell and find out that if you sell 126,000 units, your profit is going to be $1 million. And the other question that you may be asked is how much should you sell the product for in order to break even? So you can do the same thing, what if analysis, goal seek, 0 is the minimum, and the price you have to sell it for, if you say OK, is $22.80. That's the break-even point. So this is one part of the what-if analysis, the goal seek. The second part is the data table, and I created already a couple of tables, and I wanted to know, for example, what would happen to my output, meaning the, let me mark it, the net operating income, the expenses, and the revenue. If instead of 50,000 units you sell 10,000, 20,000, 30,000, all the way to 100,000. How did I link it to the table? I said equal total revenue, equal total expenses, equal total income, and this is how I link my sensitivity analysis or data table to the model. Now I'm going to select the table excluding the text headers, and I'm going to go to data, what if analysis data table. Nothing is changing along the row, so I'm going to ignore the row input cell. And for the column input cell, I'm going to go to the unit sold and say OK. And you see the break-even point was around 59,333 units. Same thing I did here. I equated all these cells to the original model. And here I have the prices changing. So I'm going to select the table again and do the same thing. Data, what if analysis, data table, and what is changing down the column is the price per unit. I click on the original price per unit and say OK. Once you have all these tables, you can also select the table, for example, the first one, including the text headers. And I can go and insert a break-even point chart. I'm going to use maybe this one. And you're going to see the classic break-even point charts that you see in all the economics books. I'm going to move it out of the way. So we created two one-way tables. Now what I want to do is I want to create a two-way table. So I'm going to grab all these units, copy them, and paste them here. And now what I want to do is I want to grab these prices and make them as the horizontal. I'm going to copy the horizontal, and then I'm going to right click here and say paste special and values and transpose. I'm doing it as values because I don't want to have the formats, and I'm going to say OK, and I get all these values going left to right. Maybe I'll format them this way, and then you can see that I have a two-way table. The price per unit is changing along the row, and the number of units is changing down the column. And in the intersection, I'm going to analyze my net operating income. I want to know what would happen to my net operating income is if instead of the original 50,000 units and $20, I'm going to have 20, $20.5, $21, $21.5, all the way to $24.50. And the number of units instead of 50,000, 10,000, 20,000, all the way to 100,000. I'm going to select the table by clicking on any one of these cells and use Control A or Command A with a Mac. And I'm going to do the same thing by going to Data, What if analysis, Data table. What is changing along the row is the price per unit. And what is changing down the column is the number of units. And remember that I linked this table to the original model by clicking here and making it equal to the net operating income. When you say OK, you're going to get all these values. And I'm going to pick up this format that I liked to show you what I did. I'm going to use Control 1. This is how I formatted these values to have positive values or negative when they are red. So I'm going to pick up this format, going home, use the format painter and paint the inside of my table. And I'm going to double click here and here to see all the values. So if you noticed, I have the red values for the negative range and the black values for the positive range. Okay, so what did we do here? We reviewed one more time the what if analysis concept of Excel. We discussed the goal seek and the data tables, one-way and two-way tables.